My name is Velan son of Silvaraja. Now I would like to present the company that I chose for this assignment is Baraka Offshore Petroleum Berhad. As a brief introduction of this company, the company was incorporated in Malaysia on 1st March 2012. The nature of businesses are offshore transportation and installation. Moreover, EPCC stands for Engineering, Procurement, Construction and Commissioning, Onshore and Offshore Construction, and Topside Major Maintenance and Hookup and Commissioning. The number of employees working in the company is 299 employees. Next, I would like to move to the MFRS 108, which is Accounting Policies, Changes in Accounting Estimates and Errors. In the year 2020, there is an error occurs in the prior year where the adjustment made in the current year. Errors such as current asset, which is contract asset, current liability of other payables, and equity in the reserve account. In the year 2021, error had occurred in the prior year and the adjustment had made in the current year. Errors such as current asset in the contract asset, equity in the reserve account, and the amount stated in the cost of sales. Moreover, since there is no any information related to MFRS 110, which is even after reporting governance, and MFRS 136, which is impairment, both MFRS is not disclosed during the years 2020 and 2021. Furthermore, MFRS 116, which is property, plant and equipment, in the year 2020, the company disclosed the loss on disposal of motor vehicles amounting 150,000 because the carrying amount of 545,000 is more than the disposal value, which is Rm 395,000. In the year 2021, the company disclosed the newly purchased computers for the year 2021 amounting 23,000. In the year 2020, there is no any key audit matters, and in the year 2021, there are key audit matters in property, plant and equipment, revenue and trade receivables. First key audit matters for Baraka Offshore Petroleum Berhad is impairment assessment of barge and pipe laying equipment. As at 30 June 2021, the group recognized barge and pipe laying equipment with a carrying amount of 68,253 million. Next key audit matters is revenue recognition of pipeline commissioning and construction contracts. The group generates revenue and pipeline commissioning and construction contracts amounting 105,132 million for the financial year ended 30 June 2021. Finally, the expected credit loss of trade receivables and accrued billing. As at 30 June 2021, the group carried trade receivables and accrued billing balances of 40,013 million and 13,437 million respectively and recognized expected credit loss allowance of 411 million. There are four types of financial analysis tested to identify the impact during the COVID-19 pandemic. Firstly, profitability ratio has been divided into three, which is net profit margin, return on asset and return on equity. Net profit margin has decreased from 9.4 to 0.61 and it shows that the profit has decreased as well. Next, the return on asset also decreased from 6.8 to 0.28, where it shows that the company's asset has been reduced compared to the previous year. Moreover, return on equity increased from 0.09 to 0.28, where it is not good for a company to exceed more than 20%. However, profitability ratio gives an impact to the company during the COVID-19 because the company's net profit margin and ROA has decreased from the year 2020 to 2021 compared to the three matrices used above. The liquidity ratio have been divided into three matrices, which is current ratio, quick ratio and cash ratio. The current ratio remains the same for both years. Next, the quick ratio has slightly increased because there is no inventory for the year 2021. Therefore, the cash ratio has been increased from 0.13 to 0.14, which shows the company is at less risk of having financial difficulties compared to previous year. In overall, using the liquidity ratio, the company has an impact on the cash flow during the COVID-19 period. It might be due to unrecoverable amount from the debtors. Thirdly, solvency ratio, which has been divided into three: debt to asset ratio, fixed asset coverage ratio and debt to equity ratio. The debt to asset ratio decreased slightly from 0.07 to 0.06, where it shows the company is less risky on debt for asset formation. Next is the interest coverage ratio, increased from 4.78 to 33.8. It shows the more times the company can cover its debt. Moreover, the debt to equity ratio has decreased from 1.99 to 1.38. It shows the company is utilizing its asset and borrowing less money from the third party. Based on the solvency ratio, the company does not have any impact during the COVID-19 because all the three matrices that have been tested result favorable to the company's performance. Finally, based on the market value ratio, it has been divided into three, which is dividend yield ratio, earning per share and book value per share ratio. The dividend yield ratio is 0 for both years because the company did not declare any dividend. Therefore, earning per share had increased from Rm 2.47 to Rm 7.70, where it shows the company is profitable enough to pay out more money to its shareholders. Moreover, the book value per share ratio decreased from 0.27 to 0.23, However, the company result favorable during the COVID-19 because all three matrices gives a good impact towards the company's performance.
Hi and Assalamualaikum. My name is Nur Atta bin Zainuddin and my metric number is 284402. The company that I choose for this project is Analabs Resources Berhad. This company involved in the environmental and industrial related business since 1965 in Malaysia. Its subsidiaries engage in the production, formulation, sales of resin, chemicals and building materials, waste recycling, waste reduction, treatment, processing and many more. Analabs Resources Berhad has 105 employees. The disclosure of MFRS 108 in the year 2020 and 2021, Analabs Resources Berhad had made certain amendments as a result of several errors that had occurred in the years prior. Error in 2020 is firstly amount of inventories written down amounting 685,000. Next, amount of reversal of inventories written down as much as 429,000. Lastly, error made in changes in inventory amounting 256,000. Meanwhile, in 2021, the changes are made in financial statement which are investment in subsidiaries underestimate by 12,883,000. Receivable correction from 14,400,000 to 1,121,000. Next, Analabs Resources Berhad does not disclose any information regarding MFRS 110 in the annual report of both 2020 and 2021. Moving on to disclosure of MFRS 116, Analabs Resources Berhad has disclosed a few items in 2020 which are disposal of a motor vehicle amounting 35,000. Next, transfer of leasehold land to investment property as much as 6,152,000. For the financial year 2021, the company disclosed that disposal of a motor vehicle amounting 60. Key audit matters for Analabs Resources Berhad is impairment of goodwill for both of the year 2020 and 2021. Profitability ratio shows a summarize that this ratio does not have an impact on the company during COVID-19 because all three net profit, ROA and ROE have increased from the year 2020 to 2021. Meanwhile, the liquidity ratio has had an influence on the company during COVID-19 as all three measures, current ratio, quick ratio, cash ratio have significantly decreased from 2020 to 2021. According to the solvency ratio, the firm will have no influence to COVID-19. This is due to the fact that all of the ratios that have been evaluated have produced positive result to the company's performance. The same goes to market ratio. Market ratio has no effect on the company during COVID-19 due to the fact that both earning per share and book value per share have risen from 2020 to 2020.
Hi, my name is Nur Christina binti Ramlan and I'm going to present to you guys Bumi Armada Berhad. So Bumi Armada is a Malaysia-based international offshore energy facilities and service provider with a presence in over 10 countries spread across 10 continents, supported by 929 people from over 29 nationalities. The company offers a range of capabilities including field development support, production facilities, installation and operation, pipe laying, hookup and commissioning. So this company incorporated in 1995 and first went public in 1997. So as has been shown in our presentation, the sector of Bumi Armada Berhad is energy. The disclosure of MFRS 108 from company's annual report, it is stated that the amendment for year 2021 and 2022 does not include MFRS 108, accounting policies, changes in accounting estimates and errors. For the disclosure of MFRS 110 in 2022, there is a subsequent event that happened, which is in February 2021, the group signed an amendment and restatement agreement, which is an amendment agreement to defer the final repayment date of the Tranche 1 facility under the group unsecured term loan facility to 23 November of 2022, the details of which are disclosed in the preface of the financial statement, section E, liquidity risk. As of 31st December 2022, the group's current liabilities exceeded its current asset by RM 214.4 million due to the classification of unsecured term loans of RM 537.1 million as a current liability, as the repayment of Tranche 1 facilities is due within 12 months from the balance sheet date. In year 2021, there is two subsequent events that happened, which is on 19 January 2022, the group entered into a sale and purchase agreement for the disposal of the entire issued and paid up share capital of its wholly owned subsidiaries, the ice class vessel companies. to AC Management Company and KN Holding Limited Company for a total cash consideration of USD for 44.5 million, equivalent to approximately $186.6 million. The disposal was completed on 20 January of 2022, where the ice-class vessel companies ceased to be a part of the group. In the second event is in February 2022, as a result from the Russian and Ukrainian conflict, a number of countries have imposed sanctions on certain Russian citizens and enterprises. The continuation of the conflict may trigger a series of additional sanctions, which could cause an adverse effect on the group's operation in Russia. Disclosure of MFRS 116 Property, Plant and Equipment for year 2020 is property, plant and equipment are stated at cost less accumulated depreciation and accumulated impairment losses, and subsequent costs are included in the asset's carrying amount or recognized as a separate asset, as appropriate only when it is probable that future economic benefits associated with the item will flow to the group and the cost of the item can be measured reliably. The depreciation method for this Bumi Armada Berhad is straight line basis. And we also can inspect there is a disposal of office equipment, furniture and fittings total 1,000 in the note to the financial statements of property, plant and equipment. For 2021, the MFRS 116 Property, Plant and Equipment inspected there is a disposal of vessel and vessel equipment, dry docking for 1,115,000 ringgit. While the disposal of motor vehicle equipment, furniture and fittings, and office equipment and right-of-use asset total of 1,282,000 ringgit. There is also disclosure of MFRS 136 for Bumi Armada for year 2020 and 2021. The 2020 is an impairment charge of RM 314.4 million was recognized for certain OMS vessels, while an impairment charge of 43 million for non-current asset classified as held for sale has been recognized for the year. For the year 2021, there is an impairment charge of 139.0 million was recognized for certain OSV vessels, of which RM 119.8 million is in relation to the vessel of discontinuing operation. There also has been a critical audit matters that has been pointed out in annual report for year 2020 and 2021. For the year 2020, there is assessment for the recoverable amounts of vessels, liquidity position of the group, and Bumi Armada Berhad of recoverability of investment in subsidiaries. While the 2021, there is only 2 points of critical audit matters, which is assessment for the recoverable amounts of vessels and liquidity position of the group. We have entered financial ratio and analysis for Bumi Armada Berhad. So let's start with profitability ratio. In 2021, return on asset, return on equity and net profit margin has increased significantly. This is due to increment in economic stability after pandemic. Bumi Armada is a company supplying offshore energies, facilities and service provider. Therefore, the activity of offshore has getting normal in 2021 compared to 2020. While our second ratio and analysis is liquidity ratio. As has been shown in graph beside me, in liquidity ratio, current and quick ratio has already increased, showing normal effect on company due to post-pandemic. However, the cash ratio for 2021 has slightly decreased, shows company might has low liquidity in terms of cash. This could result in challenge for paying short-term obligation compared to 2020. We have arrived at third ratio and analysis, which is solvency ratio. What is solvency ratio? Solvency ratio measures asset coverage on future payments and commitments. For 2021, Bumi Armada's debt to asset and debt to equity has decreased, showing less risky on debt for asset formation, and the company has borrowing less from third party, while interest coverage ratio has increased, showing the more times a company can cover its debt better after the pandemic. And finally, the last one of the ratio and analysis is market ratio. There is no dividend yield ratio since the company did not declare the dividend for year 2020 and 2021. The earnings per share has increased significantly, and this shows capability of Bumi Armada to pay its shareholder much more compared to 2020. However, there is only a slight difference in 2020 and 2021's book value per share.
Assalamualaikum to Dr. Nuria. My name is Nurfati Shazwani binti Mat Julaini, metric number 284618. Now I will present about Astra Asya Berhad Company. This company engaged in investment holding. The subsidiary engaged in civil engineering and building contractors, property development, operation of oil palm estates, and provision of estate management. The projects can be broken down into three categories. The first category comprises road construction, bridge, highway, and new settlement infrastructure. The second category comprises building development, industrial parks, and water treatment plants. The last category is related to earthwork, commercial, housing, and industrial development. Founded in 1996, a public limited company and its share have been listed on Bursa Securities Malaysia since 1998, and they have 135 employees. Next is MFRS 108. The group and the company have consistently applied the accounting policies to all periods presented in financial statements. There are some amendments to accounting policies that were adopted by Astra Asya Berhad. However, the amendments have no material impact on the financial statement of the company. Thus, the company did not disclose the changes and modification. For MFRS 110, due to the COVID-19 outbreak, the Malaysian government imposed a total lockdown on the country in mid-March 2020. As a result, the financial position and financial statement as of and for the year ended January 31st, 2020 have not been modified to account for the aforementioned impact. Meanwhile, there are two events occur in year 2021. The first occurrence is on 10 May 2021. The group has incorporated Astra Cham Sdn Berhad, and the other event is same with the year 2020, which COVID-19 pandemic, and as the result, the financial position and financial statement as of and for the year ended January 31st, 2020 have not been modified to the account for the aforementioned impact. Next, for MFRS 116, Property, Plant and Equipment, for the year 2021, there is disposal of land with amount of 1,017,124. For MFRS 136, Impairment, for the year 2021, impairment losses of continuing operations, including impairment on inventories. The key audit matters for Astra Asya Berhad for the year 2020 and 2021 is impairment of property, plant and equipment, and right of use assets, fair value on biological assets, and for the cost depreciated on straight line basis over their useful life. There is a different for 2020. The useful life is 3 until 99 years, and for 2031 is 5 until 99 years. For the profitability ratio, the net profit margin increased. Meanwhile, return on asset is same and return on equity is increased. The profitability ratio does not have an impact on the company during COVID-19 because the ratio have increased from the year 2020 until 2021. For liquidity ratio, the current ratio, quick ratio, and cash ratio is increased. This means that the liquidity ratio does not have an impact on the company during COVID-19 because the ratio have increased from the year 2020 to 2021.
Assalamualaikum, my name is Nur Aisha and I will be presenting about Assalamualaikum, my name is Nur Ali Aisha and I will be presenting about Mulus Holdings Berhad. The company incorporated in Malaysia on 17 October of 2014 and engaged in the design and development of automated test machinery, test and measurement instruments, and the supplies of design, consultation, and test-related service. The company also concentrates primarily on the radio frequency and mixed signal semiconductor test sectors, followed by the automotive and lighting markets. In 2020, alongside with the MFRS 108, the group has chosen to employ the simplified retrospective transition method. The comparative information for 2019 was not restated using the simplified retrospective transition method, and also the reclassification and adjustment resulting from the new leasing regulations are reflected in the opening balance of the group's financial statement as of 1 October of 2019. And it also presented in accordance with the prior accounting period under MFRS 117 leases and one IC interpretation for determining whether an arrangement involves a lease embodied in intangible asset. In accordance to MFRS 116, the company disclosed the gain on disposal of freehold commercial because the carrying amount is less than the disposal value in 2021. Whether in 2020, the company also disclosed the loss on disposal of office testing equipment because the carrying amount is less than the disposal value. In 2020 and 2021, MFRS 136 impairment of asset has been disclosed for intangible asset, capitalized development costs, and are reported at cost less accumulated amortization and any accumulated impairment losses for asset with finite useful lifetimes. And at the assumption of each reporting period, the amortization period and method are evaluated to verify that the estimated useful life of the asset are consistent with earlier estimations. Next is key audit matters for the company. In 2020, the company has two key audit matters, which is first is impairment of goodwill and development costs. The group has 13.66 million in goodwill and also 6.05 million in capitalized development costs. The significant assessment for these key audit matters is analyzing revenue derived from this project for the previous and current fiscal years. Second is valuation of inventories. The group had exposed to the risk that the inventories would become slow moving and also outmoded. And the audit procedures regarding to the valuation of inventories is examining and verifying the net realizable value of the inventory and also on a simple basis, and also reevaluating the appropriateness and sufficiency of inventory write-downs recognized for the identified exposure. Next, in 2021, the company has one key audit matters, which is capitalization and development costs. The group has 11.09 million in development costs capitalized, of which 5.56 million was added during the fiscal year. And the significant assessment regarding these key audit matters is reviewing the development expenses recognized and capitalized to ensure that they meet the MFRS 138 requirements. Next, I will be talking about the financial ratio of the company, and first ratio is profitability ratio. The net profit margin has decreased from 0.19 to 0.17, and it shows that the profit has decreased as well. Next, the return on asset also increased from 0.03 to 0.07, where it shows that the company has less asset compared to the previous year. And moreover, the return on equity increased from 0.04 to 0.09, where it is good because both years the company did not exceed 20%. Next is the liquidity ratio. First, the current ratio decreased from 3.16 to 5.14. Next, the quick ratio has also decreased from 4.04 to 2.59, and therefore the cash ratio has also been increased from 0.09 to 0.19, which show the company is at less risk of having financial difficulties compared to the previous year. Next is solvency ratio. The debt to asset ratio increased from 0.07 to 0.16, where it shows the company is less risky on debt for asset formation. Next, the interest coverage ratio increased from 7.49 to 12.03, and it shows the more times a company can cover its debts. Moreover, the debt to equity ratio has increased from 0.09 to 0.23, and it shows the company is not fully utilizing its asset. Lastly, market ratio. The dividend yield ratio is 0 for both years because the company did not declare any dividend. Therefore, earnings per share had decreased from 34 ringgit 70 cent to 12 ringgit, where it shows the company is not profitable enough to pay out more money to its shareholders. Moreover, the book value per share ratio remained the same for both years, which is 0.15.
Hi and Assalamualaikum. My name is Amira Akila binti Rahman Putra, matrix number 284548. So the company that I choose is Astino Berhad. Astino Berhad specializes in the processing and trading of steel products and other metal building materials. The main product is metal roofing, and the products include agri facilities, sea purlin, small sea purlin, truss and batten, piping, scaffolding, slitting and leveling coils. The company incorporated in the year 2000 as a holding company in Malaysia. The company has a total of 700 employees. Next, the closure of MFRS 108. In 2020, the group has elected to apply the new requirement of MFRS 16 from 1st August 2019 with the following cumulative effects of initial application recognized at the date without restating the comparative information. For 2021, the company disclosed that a final single-tier dividend per share increased from 1 cent to 1.5 cent per share. Then the disclosure of MFRS 110 event after reporting period. It shows that the company has no disclosure in both years of 2020 and 2021. Then, disclosure of MFRS 116 shows that in 2020, the leasehold land was depreciated on a straight line basis over the lease term of 82 years. But in 2021, there is no depreciation of leasehold land stated. For the closure of MFRS 136 shows that there is an impairment loss of 2,300 ringgit from the amounts due from subsidiary were unsecured, interest-free and repayable on demand on year 2020, and there is no impairment loss on year 2021. It shows that the key audit matters for Astino Berhad is valuation of inventories are the same for both year 2020 and 2021. The audit procedure for key audit matters are by obtaining an understanding of, first, the company's inventory management process and how the group identifies and assesses the inventory write-downs, and how the group makes the accounting estimate for inventory write-down. Next, it shows that the profitability ratio does not give an impact to the company during the COVID-19 because the company's profit margins, return on assets, and return on equity has increased from the year 2020 to 2021. As the graph shows that the solvency ratio has no impact on COVID-19 as the performance of the company has improved of all the ratios that have been evaluated from 2020 to 2021. Next, we can see from the graph the liquidity ratio have an impact of the company during COVID-19 because it shows that the liquidity ratio increased from 2020 to 2021 as the company is more liquid and has a better coverage of the outstanding debts. Lastly, the market ratio shows that the company has a good impact towards the company performance because of the increase in the earning per share from the year 2020 to year 2021. Even though the value of book value per share decreased in 2021, which is 0.28, the value stated still under 1, which is considered solid investment by the value investors. That's all from me. Thank you.